You've got questions, we've got answers. We have the man to answer them. Jeffrey Levine from Buckingham Wealth Partners. Jeffrey, welcome back to another episode of Ask the Hammer.
It is great to be back with you, Bob.
It's great to have you here. I've got a question in my inbox. Goes like this. I own rental property and would like to sell it and buy another rental property. Should I do this using a 1031 exchange? And if so, what are the steps involved?
Sure. So like many of our questions, Bob, the answer is
it depends.
That's right. It depends. Yes. So I would say in many cases, it does make sense to do a 1031 exchange where you can, right? Because you're just deferring a tax liability into the future. That said, do we want to defer a tax liability into the future? Maybe this is a particularly low income year for this individual and paying tax on a capital gain might make sense. How old is this individual? If they're closer to the end of the game, so to speak, well, if you're holding on to those properties until death, there's a step up in basis. There, a 1031 exchange makes a ton of sense. In fact, that's a very common strategy for a lot of wealthy individuals. They'll never pay tax. They just take one property, and when they decide they don't like it anymore, they move it to another property, to another property, to another property, and they never pay tax on the gain. They just wait until they die, and their heirs can sell it without any income tax liability whatsoever. So there are a lot of reasons to defer that tax liability. But again, if you think, well, I'm going to sell it when I'm 50, and you think at 50 you'll have a much higher tax liability than you do today, maybe accelerating that taxation is not such a bad thing. Of course, doing so means when you buy your new property, you have an increased basis. So you have an increased amount from which to take depreciation going forward. So there are gives and takes here between these two. Now, for those who want to do a 1031 exchange, there are a few things that are absolutely critical to understand. But the most important one, the one that is often where mistakes occur, is that this isn't like an IRA rollover where you can kind of do everything on your own, right? Just pick money up from one house and plop it back down in another. You need the help. You want a qualified intermediary here, right? That is really important to identify a qualified intermediary. There are timing restraints between when you sell your old property and how you identify. So you actually have to go out in advance and identify the potential properties that you will use for your new purchase. And then you've got to buy them within a prescribed amount of time. So there's lots of things that go on here. And because of that timing, you want to be very careful about lining these things up and making sure you have an out, if you will. If for whatever reason, your property that you identified falls through, what's your backup? So identifying multiple properties can sometimes be a good idea so that if one falls through, you've got something else to use.
Right. So you mentioned multiple properties. Is it possible that you could do a 1031 exchange with several properties based on the value of the primary property that you're about to sell?
Yeah, you can split that across. Again, you have to follow the rules, identify them, and purchase them with a prescribed amount of time. But yes, those are absolutely all things you can do. And this is just another technique of tax deferral, right? Which is a tried and true tax strategy for a lot of people. That's why we talk about, holding on to investments for long term, right? Just if you buy a stock and you don't sell it, it's tax deferral. If you put money into an IRA, it's tax deferral. You put money into a 401k, it's tax deferral. Paying tax later on, all things being equal, is a good thing. But that first part of that sentence is really important, Bob, right? All things being equal. Yeah. If you're thinking your tax rate will be higher in the future, all things are no longer equal. Now, maybe you want to pull some of that off the table today. So should you use a 1031? Part of it goes to what type of property you want to invest in, right? Is it a like kind of property? Maybe you want to look at something that's not like kind, that it doesn't qualify for 1031 exchange. And so you'd have to ask yourself a question, is this particular property that I like, is it worth paying the tax today when I sell this existing piece of real estate? Is it worth paying the tax having a lower amount to invest in the future, but I can now invest it into this other type of thing that I think will grow more? Or should I put it into this thing that I think will grow less, but by avoiding taxes today in a 1031 exchange, I've got more to invest in that to start, right? So you've got to run the numbers and see which of those makes the most sense over the long time. As always, there aren't easy answers, just questions.
So I know that you're fond of saying things like, it depends. I'm fond of saying it's complicated. And my guess is speaking to a financial advisor would be the wisest move of all.
Absolutely. A good financial advisor or a good CPA who understands forward-looking tax projections and tax planning. When we talk about tax professionals, very important to distinguish between those who are tax preparation experts and those who are tax planning experts. And while the same person can do both, oftentimes individuals focus on one or the other. Here, we're looking at the future. We're trying to figure out what makes the most sense over the long term. That's where you want to make sure you're working with someone who's got good knowledge of tax planning. Tax preparation knowledge is helpful. Tax planning here would be essential.
All right. Well, I think you've essentially answered that reader's question and then some.
Well, thanks, Bob. I appreciate it. And if you'd like to give us a shout and exchange your question for an answer, we'd love to hear from you. Give us a shout. Email us at askthehammer@buckinghamgroup.com. Again, that's askthehammer@buckinghamgroup.com. And Bob and I look forward to tackling your questions real soon.